Good evening. I'm Dan Fitzpatrick at StockMarketMentor.com, and it's Thursday, October 29th. In this video, I want to look at GoPro. Now, I was on CNBC after the close. I was on the closing bell, which happens after the close, talking about GoPro. And it was actually kind of cool. They're doing this more and more. They're not asking me to bring charts, which I love because I look at a lot more stuff in making my trading decisions than what the chart looks like, though at the end of the day and at the beginning of the following day, the chart is really what should dictate whether you act or whether you watch. So anyway, we were talking about GoPro, and this is really it's kind of an interesting conundrum, and here's why. Okay, I bought some GoPro this morning when the stock was trading down. I really felt last night that it would probably hold at 25, and we had a covered call going on Option Market Mentor, and my suggestion was that you pull your stop and look to buy because we had sold the $30 calls for about $3.50 or something like that. So it's turning out to actually to be a good trade because we were anticipating holding over earnings. Anyway, I don't want to get too far afield there, but the point was I said, you know what, pull your stop, wait for the stock to stabilize, and it probably will around 25 or so, and then buy your call back. You make about a $3 profit on the call, which drops your cost basis in the stock. Then, if or when the stock runs up, and I'm not talking about to 25.62, I'm talking about like another 10-15% or so to test the breakdown, then sell those calls against it again. Maybe not the 30s, hey, maybe the 28s, 27.50s or whatever, but just kind of gradually work it like that. But that was just kind of an aside. My point was this: I'm looking at this, and technically just for a trade, I look at this as like it's hit an all-time low on 4 times average volume, okay, after suckering people in, or somebody got suckered in on twice the average volume yesterday, where the stock was up 7%. Okay, so somebody thought they knew something, and they're buying a boatload of stock before earnings. Well, that didn't work out too well, did it? So you've got like 41 million shares being sold by people who are totally losing money on this dog. But I'm sure it looked good on film. So from a technical standpoint, this is actually a really good buy right here. But from a fundamental standpoint, and this was what I was explaining on CNBC, and you never get enough time, was from a fundamental aspect, I don't really think the company's that great. I mean, the multiple contraction has been quite impressive. I still saw somebody on this morning from some stock house that has a $90 price target on GoPro. Okay, they probably value like marijuana stocks too. 90 bucks on this thing. Good luck with that. But the thing has a market cap of over, it's fallen by 60% from the very high. The reason is, from this last high, the reason is because now their revenues, oh my gosh, they're growing at like 43% or something like that. Okay, but that's the worst quarter that they've had. So their revenue growth has been decelerating. Still growing, but each quarter is successively less growth than the last quarter, compared to a year ago. So again, when you just look at the headline number, GoPro's, revenue growth was blah, 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 and then you look at the stock and say, okay, the market's rigged. Why is this down so much? I'm just telling you why it's down. Because even though, like the headline number, like the unemployment number, might be impressive, it's totally worthless with respect to what investors look for. They're looking for accelerating revenue growth, not declining revenue growth. And so that is, in my view, the best description, the best explanation for why GoPro fell. And with that said, I'll say it again, I bought it today and I plan on keeping it. unless the stock, I'm telling you exactly where my stop is, or at least where it'll be based on, 24 bucks. I bought it for around 25 and change, something like that. I think like 25, 35. If the stock falls down to below 24, and I'm actually giving it a little more room than maybe I need to, if it falls lower, then I'm just going to close the trade out. But when I see this kind of volume, this looks like a total puke fest here, clearing the way for more upside. Again, their revenues are growing. The company's growing. It's just that the growth rate is decelerating. Investors look for accelerating growth rate. This is not that. So look for a technical bottom, but only be looking at this, in my view, from a technical standpoint, because we've got, in other words, the chart standpoint, we've got the holiday season coming up, so you're going to see sales. But the point is, if you, and you know this, if you own a Hero, if you own one of those GoPro cameras, I kind of doubt you're looking to upgrade to another one, because there's not that damn much difference between the two of them. It's not an aspirational thing like the next iPhone, or, oh, I want to get the new iPad because it's a different color. People strap these things on their bodies, on their helmets, and then go do fun stuff. They're more interested in the fun stuff than they are whether the touchpad is pressure sensitive or not. So understand exactly what this company is, what their growth prospects are, then focus on the chart and make your decision based on that chart. I've just told you mine. If the stock keeps moving higher and higher and higher, I'm not going to really change my opinion on the fortunes of the company unless new fundamental data comes in, but I will be happily long the stock.